game, and win-win. Saudi Arabia's eastward turn catalyzed by the Sino-US trade war. Breakthrough strategy with Chinese enterprises. The Sino-US trade war has catalyzed the eastward turn of the Saudi economy, forming a complex pattern of opportunities and risks for Chinese-funded enterprises in Saudi Arabia. In the energy sector, Saudi Arabia hedges U.S. pressure by redirecting trade flows. In the first quarter of 2025, the proportion of crude oil exports to China rose to 38%. Exports to the United States plummeted by 73%. Shift to Asian markets to achieve total balance. Non-oil economic cooperation accelerates. China and Saudi Arabia's new energy investment breaks through $25 billion. Longji, Jinko, and other companies transfer photovoltaic production capacity to Saudi Arabia. Lenovo invests $2 billion to build Riyadh laptop factory, avoiding U.S. tariffs on China with the Made in the Middle East label. Using Saudi Arabia's 10% benchmark tax rate to reshape supply chains. At the financial level, the RMB settlement ratio rose to 20%. Saudi central bank holds 15 billion yuan in foreign exchange reserves and signed 50 billion yuan local currency swap agreement. Dubai's petroleum RMB futures single-day trading volume exceeds 5,000 lots, promoting the de-dollarization of energy trade. But the technical game has emerged. Supply chain strategy. Jizan Economic City and Red Sea Newtown Free Trade Zone have become key hubs. Huawei's Riyadh factory produces 5 million 5G equipment annually and is re-exported to the United States. Tariff costs are reduced by 62%. In geopolitics, Saudi Arabia implements a double bind. Both participate in the U.S. Middle East Infrastructure Plan. It has also established a 6G laboratory with China. Promote the Global Supply Chain Resilience Initiative to lay out 25 key industrial chains. But it faces the risk of rules, such as the investigation of the U.S. Foreign Corrupt Practices Act. Short-term challenges focus on the extension of the U.S. technology blockade and policy fluctuations such as the increase in Saudi VAT to 15%. The long-term opportunity lies in Saudi Arabia's non-oil economy, which accounts for 50% of the total. New growth areas such as healthcare and education, and the exchange rate hedging advantage brought by the internationalization of the RMB. Chinese companies need to strengthen their localization capabilities, upgrade compliance system to deal with long-arm jurisdiction, and use Saudi Arabia to radiate African and European markets. Overall, the trade war has accelerated China-Saudi Arabia's strategic cooperation, but the depth of enterprise localization and risk hedging ability will become the key to victory.